make sure that we are telling a compelling story to our customers. I am also a founder of an organization that is devoted to looking at diversity, equity, and inclusion through the lens of perspective taking and building psychological safety. And the reason why we're here is I am also an angel investor, and I've been angel investing for the past couple of years in a syndicate called Tech Coast Angels. It's based here in San Diego. And I am also going to be joining that board. So I'm happy to be here.
I'm so excited to have you here, Maisha. Part of it is selfish because I've always wanted to get into angel investing. Being in the Silicon Valley, I have numerous opportunities that come my way from the startup organizations. And I've always hesitated. I am a risk taker, but I don't know why. Or when it comes to angel investing, I cannot wrap my hands around it and head around it. So let's start with what is angel investing. And specifically, what I want to focus on is when we're talking about angel investing in startups, what stage are we looking at with these startups?
Yeah, so let's start from what is an angel investor and how is it different from some other sources of capital that a company might get. So an angel investor is simply a person who is committing their own dollars to funding a company. And we'll talk about the startup phases that this happens in. It's usually not early stage companies. It's usually those organizations that are what we call pre-seed. So we'll talk about that in a second. But what we do as angel investors is we look at a company, we do due diligence to understand what is it that your company delivers, and we make a choice about, is this something that I want to put my early stage money in? And we often do that with the promise of getting some higher returns some years down the line, usually about 6 to 8 years down the line is when you start to see some of those returns. So let's talk about where angel investing is different than some other things you may have heard of, like venture capital or crowdsourcing.
Yeah.
And so in friends and family, right? These are all sources of money that a new entrepreneur may seek to fund their business. And so in the real early stages, when you are in that first phase where you're saying, hey, I have an idea, and I don't quite know how I'm going to turn that idea into something that makes money yet. I don't really have a prototype. At that point, you're usually using your own money to start that business. And you probably are going to friends and family and saying, hey, I have an idea. Can you please help me? Can we invest? From there, at some point, when you start to demonstrate that your idea is viable and that there's some traction with it, you might go to a crowdsourcing team and say, hey, I have this idea. Can you all contribute money to me and help me think about what that idea is going to be and how I bring it to life? Angel investing is a more formal process. And so we are looking for companies, when you're an angel investor, who have already proven that there's some viability of this product. You have something that we call traction, which is, it means you have early customers who are willing to pay for what you offer. And ideally, especially in the case of like a SaaS company, you have some recurring revenue that's starting to come through.
Yeah.
Let's just contrast that at the other end of the spectrum. And so angel investing, we're usually investing somewhere about $100,000 to $500,000 at this point. Venture capital is when your idea is really proven and you're ready to scale up, and someone is looking for this to become a blockbuster. And we're talking, 3 to 5 million is usually where those dollars will start. And that's really what distinguishes angel investing from venture capital.
So I want to clarify this for the audience, because the first time when I heard it, I was like, oh my God, do I have to shell out like $100,000 at least to be an angel investor? And that's not true.
No.
So what is the minimum amount? Like what money can I go in with and start experimenting with angel investing?
So this is an interesting question, and it depends is the answer that I will give you, and I'll tell you I give you that answer. I joined what you call a syndicate. So this is a group of angel investors that come together with the intent of basically diversifying the risk, mitigating some of the risk involved in it. The group that I joined initially had a minimum investment that they were seeking of $50,000 a year for an angel investor. However, that turned a lot of people off. And the idea of angel investing is to get more heads together so that, again, you can understand the market better. 3 heads, 4 heads, 10 heads are always better than one, so that we can also do due diligence together. So what I've joined recently is within my syndicate, we have a fund. And if you are interested in angel investing and you really just want to get started, I encourage you to look for organizations that have a fund. And what the fund allows you to do is to enter into angel investing with as little as $10,000.
Yeah, and that $10,000 seems a little more manageable to everybody else, as opposed to, I know a few times when I've been approached by companies that are looking at angel investors, and these are, individuals whom I know, there has been conversation around for $25,000. Here is the amount of equity that we are going to give you. I think the going with syndicates and going with funds, the beauty of that is that equity amount and everything else is already pre-negotiated, so you don't have to go into the negotiations yourself and maybe come out of the negotiations feeling maybe I was shortchanged, or maybe I did not get enough equity in the process. Mm-hmm. Now, there is something very important that you mentioned that I want to talk about, and others, if you have any questions, please feel free to put them in the chat and I'll bring it up to Maisha as well. But when we start thinking about angel investing, it's not immediate returns that we are looking at, right?
That's right.
That is a mindset change too. So it's not like your 401k or E-Trade contributions where you can go in and check how you're doing every day. Mm-hmm. How did you go about that mindset change?
Yeah. 2 questions packed in there, Rasham. So let me go back to your first item, which is about understanding the equity that you're going to be getting as you start to angel invest. And so, there's a lot of terminology that floats around. One of them is the cap table, capitalization table, which is used to help you understand what is a company worth? What is the valuation of this company? And when you angel invest, you are typically investing with others who are also investing in this company. And so a tool like a cap table enables you to understand and have in writing what percentage of that equity are you going to be receiving in exchange for your investment. And it's really important to know, not just because of what you're going to get back, but there's also power in having more equity than others. And so if you come in with your own investment of $25,000 and someone else has invested $250,000, not only do you have less equity, but you're also going to have less power to inform some of what happens in that organization. And so this is where coming in with an angel investment group helps, not only because you're able to bring more money to the table and buy a bigger share of that equity, but because you also get more rights. So you may get a board membership, you may get a board directorship. In some cases where it's a really big investment, you may even become the chairperson of that board. And with that comes a lot of influence over helping the company do the second part of your question, right? Which is, how do we make sure that we're going to be getting something back out of this? Because that's the point of angel investing. None of us go in because we are truly angels with this and we just say we want to give money. We want to get a rate of return. We want IRR out of this, and preferably the highest IRR possible. Sadly, the truth is that as you angel invest, there's a lot of risk. And so most companies won't succeed. In our fund, we invest in about 20 companies a year. We anticipate that, 2 or 3 of those will return money. But those 2 or 3 actually end up making up for those other 20. So this is the whole idea behind diversification. And we're typically looking for something that is 20 to 30% or above return on those dollars. Because if you think about it, and if you think about some fundamentals of finance, it needs to be worth it for you to be losing some opportunity costs of putting your money aside for, 6, 7, 8 years while you're waiting for that return. So that return needs to be darn worth it. Did that answer your question, Rasham?
It does. And part of this is what I like about funds as I've been reading about it is you might be investing $10,000, but that $10,000 then gets diversified in different categories that you have chosen. So it's not that you're just investing those $10,000 in one company, you are investing those $10,000 across different companies,
That's
which
right.
increases your chances of success. Because one of the probability increases. However, it does reduce your chances of, how much you're going to make out of that investment because it's diversified.
That's absolutely right. I mean, it's almost the same idea as a mutual fund, right? That there's a lot of different funds that are pulled together, or an index on the stock exchange. There's a lot of different companies that are pulled together in there. And over time, what you're hoping is that those that pull the market down or that are having a down streak, that those others that are going up are going to balance that out. And you're right. The odds of losing money in angel investing are very, very high. So the more companies that are in your portfolio, the more likelihood that one or two of them is going to be successful and that you won't lose your money.
So that's actually a very good segue to the next topic that I want to talk about. Angel investing is not just about making money. There are also a lot of other benefits to it if you become an angel investor. Yes. You were able to get a board position in your fund because you started with angel investing. It helped you grow your career and your profession in a different stream altogether, which is an opportunity you probably would not have gotten for a long time just being a corporate employee. Let's talk about that.
I love that question. I got a tingle in my stomach when you said it, because the learning the angel investing landscape is just one part of it. I have learned so much in this process. The first part of it is just what makes a company successful. So if you think about leadership and companies that grow, the idea really matters. But underneath that idea, you got to have the right team who's in place. So I've learned to evaluate founders and CEOs and look at their team and understand what is that dynamic and that energy that they have together. I have learned to do a lot of due diligence. So how to understand the financials of an organization to see, are you healthy or are you not healthy? And the best part about doing it as part of a syndicate is I don't have to do it alone.
Yeah.
So I can learn from other folks who have been doing this for a far longer time than I have. And it helps me to share that risk and not to feel like I'm such a newbie and I'm going to get it wrong. The other thing that it's helped to do is the networking. And so I have met so many wonderful founders, business people who are all committed to angel investing, but who are also very, very connected. And so that network is not something that leaves you, and you get to work up close and personal with them. So lots of benefits.
Let's talk about personal brand also. How has it taken your personal brand to the next level? Because you and I have talked about it.
Yeah. And I'm glad that this is just a group of women who we're talking to. And I'll say there's not a lot of women, and there's even fewer women who look like me and you in these angel investing groups that I am in. And so there is, in the beginning when I came in, there was a lot of curiosity, and I use that curiosity to help elevate people's thinking, to build up what you just said, the brand value in what I know, and to build up credibility in what I am able to bring. And so now, as a result of me being involved, like I said, in a very short period of time, I've been invited to be a part of the board of my angel investing group. And just to put that in context for you, our fund this year, and this doesn't even include the money that people are investing on their own, our fund was $7 million this year.
Wow.
And so we have a significant amount of presence in San Diego in particular. And I am getting a ton of exposure through partnerships with other organizations that are also committed to the startup community. I have been invited to be on additional advisory boards, but more important, and this is the part that I care about most, I am getting the perspective of someone who looks like me, who's gone through the lived experiences that I have. I'm getting that into these rooms so that people can broaden the way that they think. And that brand power for me goes beyond me into helping to open up the door for other people.
Yeah, it's almost like, when I wrote my first book, it was not about writing the book or how much money I was going to make from the royalty piece, but what it does to me in the process and how it takes me to the next level, not just from an opportunity to give back to the community, but also build my professional and personal brand.
Yeah.
So this is exciting because this is one question that comes up very frequently. If I'm not going to make money, or if it's a long-term investment of 6 to 8 years, what is in it for me? Like, why should I be part of, why should I be part of a fund, or why should I be an angel investor? Yeah. And that's what it is. It's practically, you would go to Stanford and pay that kind of money to maybe take a 3-month course or certificate program that may not provide you that kind of knowledge and that kind of experience and that kind of network that this provides you. Yes. It's basically, for me, I look at as on the job training in a certain way and form, where you are actively, these are not scenarios that you're working on. These are real life companies as case studies that we are working on.
That's right? That's right.
So I know we have just about 10 minutes left.
Can I just comment on that though, what you just said, Roshan? Because you're right. I spend a lot of time with student entrepreneurs too. And a lot of what they talk about is very theoretical. I know that I need to go find a target audience. I know that I need to think about marketing and sales, but there is nothing that beats the lessons learned from actually getting in and seeing how companies are building things. And understanding some of the pitfalls and being able to then identify this is going to work and this is not going to work, just because you have seen so many companies who do it well. The other part that I want to briefly touch on, and then I definitely want to open it for questions, is a lot of times women and diverse women are left out of the room where this opportunity to grow wealth is happening. And so one of the biggest opportunities that comes from this, and it's well worth the wait, is you learn how to grow your money and how to grow your wealth. And you can do it very confidently in a way that's not going to just be earning, 0.5% in a bank account. And so, yes, there's risk, but there's also some really big rewards.
And to top it, I think, Maisha, it leads to the next step also. Many of us have great ideas that we don't know how to put into action. That's how to, for example, found a company, how to, build your own startup. And this is a huge stepping stone in that direction, because you already get to learn from others' mistakes. 2 years into this, while working in a formal corporate environment, you learn so much. In terms of how to found your own company, and you get tapped. And you get tapped. By the way,
I know a lot of the people who are in my in my angel investment group, are also tapped at times to become CEO, COO, CFO of some of these organizations, and I've seen it time and time again where that is happening.
Awesome. What questions do we have? Please feel free to type in your questions in the chat. I have a lot of questions. I'm just restraining myself. Where do you recommend people with no background in angel investing like myself start applying to a syndicate?
So a couple of things to know. So I would say just dive right in. If there's anyone that you know who's already a part of it, having that person do an introduction for you is always a really smart step to do that. I don't know if you're connected with some of the university business schools in your local community too. They are usually connected to angel investment groups because as they send their students through the program, the goal is to get funding. The only other thing that I will mention is there are some requirements in some of the syndicates for your net worth. And so because these things are so risky, people do want to make sure that individuals aren't losing money that they can't afford to lose. So I would also encourage you, if there's a syndicate that you're interested in, look at their website and see what the requirements are going to be for them.
I am actually working with a portfolio fund right now, and I'm looking into that. Raj, I'm going to put the link to their website in the chat so that you can take a look at that.
Mm-hmm. And feel free to email me. I will put my I don't know if my email is tied to this already. Feel free to email me as well, and I'm happy to also connect you with some of the other board members that I know who have a broad network across the state and the country.
And then the question that I have for you, Maisha, while we wait for other questions is, what sectors are hot sectors right now? I know that question, especially when it's funds, and you start picking industries where you want to invest in, you want to know what are the hot upcoming industries.
Yeah. So we're in San Diego. This is a great question because I find that this is going to be very regionally focused. So in San Diego, we are in the land of biotech and life sciences companies. Mm-hmm. So a lot of what we fund are life science and biotechs, right? We're looking for the next molecule, for the next blockbuster drug, for the next treatment, something in precision medicine. And so we are very adept in understanding that particular industry. We also invest in tech platforms. So SaaS is a really hot topic for us because the gist of angel investing is you want something that is going to have repeatable revenue.
Yeah.
And so we are always looking for those platforms. My own personal investment thesis is to look for these things in female-led and diverse founder-led organizations.
Yes. And then I'm seeing sustainability and environmental pieces also, those becoming hot industries as well.
Yeah, I totally agree with that for sure. I see we had a pitch competition a couple of weeks ago, and there was a lot about ag bio, about water, about solar. So I agree with you, Roshan.
Yeah. Sweta has a question over here. How do you get apt at understanding industries or companies? Do you attend pitches by startups? And Sweta, I'm assuming that you're talking after you become a part of the fund or even before. So Maisha, if you can handle both after and before in your answer.
Yeah, we have a pretty robust process, which I think is another benefit of being a part of a syndicate. So once a company comes in, usually through referral, a founder will connect with us. We actually have someone do some due diligence in the background to understand what's your business about, tell us what your revenue is like, who are your customers, just understanding the basics about them. Once we do some of that background work, we will then vote yes or no. Is this a company that we want to invite to come in and pitch to us? And during that pitch, the founders usually have about 15 minutes to come in, tell us their story, tell us what they're looking for from an investment perspective. And then that's where we start to dissect and really answer a lot of questions about what is it that you're offering the market? How are you making money? Is your business model sound? And you can learn a lot, Sweta, from these different discussions because you start to see, even if the companies don't deliver the same kind of product, the business models start to look very, very similar. Mm-hmm. And so from there, you start to understand it's not just the industry that you're in, but it's how do you think about building yourself, creating your competitive advantage and making money that really matters.
So, Maisha, for clarification of everybody who is on this call, who does we refer to? I know because, does it mean me even before I've started investing? Does it mean me as an angel investor in a fund who is now part of overall, fund and
Yes.
looking at where it's investing? Or does it mean board members and directors of the board, they get an opportunity? And I have a perspective on it, but I'll let you answer that.
So once you make the decision to join an angel investment group, we as everyone, right? It is self-managed. The energy, the intellect comes from everyone who's contributing. And this is why it becomes important for everyone to make their perspective known, to have their voice be known, because you don't want one or two people making all the decisions about what's in your portfolio. You want to have a voice and a say in that. So we is all of us who are part of a fund, part of the group.
And what I've noticed is look at some of your local startup groups as well. There's a lot of times that even before I'm still not an investor, angel investor. I have chickened out every time. And this is my big leap of faith this year. It was one of my goals to get started. So I've seriously started looking at it. And that's why today's topic means so much to me, because I'm learning so much in the process as well. But for instance, I'm in the Bay Area and I've attended Silicon Valley, startup foundations. I've been invited to a few of them to listen to the pitches. I have gotten an opportunity to talk to a lot of founders to understand. Mm-hmm. And that gives you a very good idea about how structurally, you're right. The pitch deck, there's a definite structure to it. There is so much more to it in terms of not just what you do with your business and how you're going to make money, but mm-hmm. the values that you stand behind. And is your business truly a business with purpose or not? Because that's what is becoming more important now as we start looking at what are the sentiments that go behind share price increase, for example? Where mm-hmm. do customers want to invest their money and their buying power in? And they want to see mission-driven companies as opposed to just product and solution companies.
And I would build on that and just say, as an angel investor, we're always looking at the exit too. Yeah. And so everything that you mentioned, Roshan, is so important because you want to make sure that whatever company you're investing in is attractive for another potential buyer, because that exit is what we really live for. And I would just say, as we're closing, take a step, just take a leap and do it. I did it. I'm still standing. I'm learning. I'm growing in ways that I had never imagined. And, the worst case, you can dive in one year and decide you're not going to do it the next, but the learning could last you for a lifetime.
And once a member, you're always a member. So you're not committing. Maisha, are you committing to investing every year?
So we have an annual membership due. So TCA, we do have to pay about $1,800 every year to just renew the membership. And then the investing fund is separate. And so I am investing in the fund because we've already had a few exits that have been quite big since I've joined the group. So I don't want to miss out on that.
Well, thank you everybody for joining us today. And especially Maisha, thank you so much for spending time with us today and answering all our questions. For future events, please go to eWOWglobal.com. We actually have an event that's coming up, and Shweta is offering professional coaching sessions at a discounted rate to everybody, knowing that it's year end and we're creating our goals, and we wanted to bring in that professional coaching for everybody. So please go to eWOWglobal.com and check out the coaching opportunity and connect with Shweta directly through there. Maisha, thank you so much. I can't thank you enough. This was so informational.
Awesome. Thank you. Thanks, everyone. Have a great weekend.
Thank you. Bye-bye.
Okay, bye-bye.